Do you frequently travel outside of the United States? If so, then you might be eligible to deduct many, if not all, of your travel expenses for your trips. What's up? I'm Karlton Dennis, guys, and welcome back to Taxes Made Simple, a show where I teach everyday taxpayers like yourself how to leverage the legal tax system. And in today's video, we'll be breaking down everything you need to know about deducting travel outside of the United States. For all of you international travelers, this video is especially important to you, so let's jump right in. All right, guys, so the first thing that you need to know about deducting international travel expenses for traveling outside of the United States exclusively for business is if your traveling trip lasts longer than a week, then you can deduct all of the travel expenses associated with that trip. This is true even if you do not spend the entire time on business activities. So for example, if you take a 3-day trip to Italy in order to participate in a series of meetings with a supplier, you do not necessarily have to spend 24 hours a day for those 3 days you're there in meetings in order for you to deduct your traveling expenses. In other words, even if there is some downtime during your business trips, you would still be able to deduct all of those travel expenses associated with the trip because the sole purpose of the trip was for business. A trip is considered to be solely for business purposes if any of the following criteria are met. Number one, the taxpayer did not have substantial control over arranging the trip. Okay, that's simple. Number two is the taxpayer is outside the United States for a week or less, combining business and non-business activities. And number three, the taxpayer spends less than 25% of the total time he or she was outside the United States conducting non-business activities. This way, the taxpayer can establish that a personal vacation was not a major consideration, even if he or she had a major control over the planning and arranging of the trip. So, what this means is that you only have to spend 75% of your time, taxpayer, engaged in business activities during your international business travel in order to deduct 100% of your expenses. That is, as long as you are outside of the United States for a week or less. Okay, so travel days count as business activity days. So for example, if you were going to take a 4-day international business trip and you were only going to spend 3 of those days devoted to business, you could still deduct all of the travel expenses. You could spend the 4th day relaxing or sightseeing, and you wouldn't even be given any trouble by the IRS for deducting the full business expense. One thing though that you need to make sure that you do, however, is keep track of all of your receipts. This is especially true if you have control over the planning and arranging of the trip. Essentially, the IRS believes that a person is more likely to sneak a vacation in if they are planning the trips themselves. That is why you as a taxpayer need to be extra careful if you'll be planning your own international business trips. All right, so what qualifies as a business travel expense? So now that you know what the rules are for deducting international business travel expenses, let's talk about what exactly qualifies as a business travel expense. What do I actually get to write off while I'm there? After all, you won't be able to use the tax rules to your advantage unless you know what kinds of expenses you can write off and deduct, right? Any of the following expenses that I'm about to list out qualify as business travel expenses. You can write these down. Let's go. Number 1, airfare. Number 2, taxi and Uber fares. Number 3, railway passes. Number 4, motels and hotels. Number 5, shipping and baggage. Number 6, AIRBNBs. Number 7, dry cleaning fees. Number 8, the business calls that you're making internationally. Number 9, communication fees like Wi-Fi fees. Number 10, your rental car. Number 11, the Turo that you decided to take instead of the rental car. And of course, we already know that I'm a foodie, so I'm not even gonna mention meals in here. Karlton eats already too much, okay? The good news is that on international business trips, meals are still 50% deductible, meaning that you can deduct half of the cost of the meals that you're eating every single day while you're on the trip. This is very good news considering the fact that this is common for international business travelers to frequently eat at restaurants and to attend expensive business lunches and dinners while they're in various fancy countries. Transportation, lodging, communication, and food are just some of the common business travel expenses that you might incur while traveling internationally. Now, There are a number of other expenses you could also incur during your travels that I haven't mentioned. If you want to know whether or not a travel expense is deductible, a general rule of thumb is that the expense must be considered ordinary and necessary to the pursuit of income to be deductible. That's Code Section 162A. This means that unnecessary and extremely lavish expenses might not qualify for deductions as an international travel business expense. For example, if you decide to purchase a Ferrari to use while traveling on your 3-day business trip, this most likely may not qualify as an eligible business deduction unless you're in a business where you can afford it and justify it. If you try to claim deductions for overly lavish expenses like the one I just mentioned, it can be a bit of a red flag to the IRS and could result in you being audited. So if you don't want to jump into an audit situation right away, then you might want to try avoiding some of these extravagant expenses that may not be necessary for your business on your business trips. Expenses for personal purposes also do not qualify for deduction. So if you have a business trip to France and if you spend one of those days going sightseeing in Paris to see the Eiffel Tower, the Louvre, and the Notre Dame, then you're sightseeing. These sightseeing expenses would not be deductible. However, all of the other business travel expenses would be deductible as long as your business trip adheres to the rest of the business travel tax rules that you and I just covered. What about extended international business travel? I'm extending my trip. Deductions for international business travel only apply to temporary stays. So if you are living in a single location outside of the United States for an unknown amount of time, then this will most likely not qualify for international business travel deduction. This is because the IRS considers these types of business trips to be something called an indefinite stay. Or if you take a series of short-term trips to the same location, the IRS may also qualify that as an indefinite stay. So for example, if you travel to Switzerland for 10 days out of every month, then this might be considered an indefinite stay by the IRS. Now, can you deduct travel expenses for multiple international business trips in one business year? The answer is yes. You can definitely deduct travel expenses for multiple business trips in 1 year. If each trip lasts for less than a week, then you can deduct 100% of all of these business travel expenses. However, as mentioned earlier, if you take many different international trips to the same business location, the IRS might start to consider this to be an indefinite stay, which would prevent you from continuously deducting all of your travel expenses. Now, how do we keep track of all of these travel expenses? Receipts? What do we do? Keeping track of your travel expenses comes down to receipts. It's crucial because the IRS decides to audit you, then the receipts will be used to prove that you actually made the international business travel expenses and you're not simply making them up out of thin air on your profit and loss statement. If you fail to produce receipts for the deductions that you're saying you're going to claim on your tax return, then it could result in a negative consequence like an audit and you owing penalties and interest fees on the taxes you should have had due. There are a number of ways that you can keep track of your receipts, guys. First, you can collect and store all your physical receipts if you really want to do that, or you can try to keep them all in one place, like having them on a phone or an app like QuickBooks. Second, you can move all of your digital receipts to a folder onto your computer in the event that, I don't know, your internet decides to explode. It's in the cloud. These are things that I would make sure that I'm doing as a business owner. Finally, you can also use certain apps to take pictures of your receipts and store them in the cloud. So, most important things that I want you to walk away from is that I want you to know that deducting travel expenses outside the United States is A, very possible to do. You can deduct all the travel expenses. B, that your trip must be shorter than a week if you want to deduct all of your travel. And C, you can spend up to 25% of your trip on non-business activities and still deduct 100% of your business expenses if your trip is a week or shorter. And last but not least, expenses for personal and unnecessary activities during your business trip, such as sightseeing, are not tax deductible. To conclude, it can be tempting for some people to just try to turn every international business trip into extended vacations, but you really need to be careful if you're thinking about doing this. The IRS gives some leeway to international business travelers to spend time doing non-business activities, but it is limited to 25% of your trip if you want to deduct all of your expenses. If you have any questions about deducting travel outside of the United States, click the link in the description and me and my team look forward to assisting you. or you're more than welcome to reach out to our company to see if there's any tools that we might have available for you as you're looking to document your expenses. My job is to get you 1% smarter, and if I did that today, I'd love for you to like, comment, subscribe, and I look forward to seeing you on the next video. Cheers.